All right, welcome back to Market Day Report. I am Scott Shelley on a Friday before a long weekend. Can you tell? Well, thank you very much for joining us. If you're just joining us, if you've been with us all day, it's my job to make you stay. It's been made a little easier today because these markets are a little higher. I will admit I've got a little bit of a boost from that, but hey, I'll take it when I can get it. It's been a rough week. Let's see what's going on in corn and see how that corn market's shaping up. It ain't bad, is it, folks? July's up 14 cents to 7.79, half cent off the highs as we go into the noon hour here at Central Time. New crop D's 13 cents higher, 7.31 3/4, penny off the highs, making its slow march towards that 7.50 level. See if we can get there. How about beans in Chicago? What's going on with soybeans? They're higher, 8.5 cents higher in that July. That's the lead contract. 17.35 is last. That's about 9 cents off the highs. If you go out to Novi New Crop, we are up a half cent. We were down a little bit, so we're kind of hanging around that unchanged neighborhood. And no, but we're up a half cent right now. 15.45 1/4. Trying to get a 15.50 in front of it. We did earlier today, but we kind of slipped back as the session wore on. How about wheat in Chicago? Chicago wheat is higher by 18 cents in that July contract. 11.61 1/4 is last. 11.70 was the high. That's about 8-9 cents. That's pretty good going, but we are firmly seeing 11.33 1/2 as the low in the rearview mirror. So we're doing pretty well there. 21.5 cents higher in March to 11.83 1/4. So some pretty good going in the Chicago wheat market. How about hard red wheat in Kansas City? 10 3/4 cents higher in July to 12.39 1/4. You go out the defers, we gain between, say, 11.5 and 14 cents. So another good board for the hard red wheat in Kansas City. Let's see what Minneapolis has in store for us for their spring wheat there. Look at this, up 20.5 cents in that July contract to 13.12 3/4. About 7.5 cents off the highs, though. We were up around 13.20 at some point. But we also are well off the lows of 12.88. And that spring wheat in Minneapolis, 13.12 3/4 is last. Finally, let's take a look at cotton. The cotton looks to have checked out for the weekend. We're now lower by 100 points to 139.61 in that July contract. We gave up that 140 level. And we've got Deese, the other one, that's the new crop, down 137 points to 122.93. Let's bring in our next guest analyst, Todd Horowitz, Bubba Trading. He's joining us from Las Vegas. Thanks for being on the show, Todd. It's a little bit easier to go through these prices today than it has been during the week. I'll just throw out there this. It looks like to me, folks probably did okay being short the market. They're short this morning and thought, what more can I get out of this trade? Probably not a lot, and they're trying to cover on a quiet day.
Probably, and I think, Scott, also, when you look, if you go back a week from today to the 20th, basically all the prices, with the exception of soybeans, which are much higher, are at the same price they were last Friday's close. So, we go in these circles throughout these markets because there's such a lack of interest right now, generally in markets. The volume is so pathetically light that, we're going through a typical phase that markets go through often. And right now we're just kind of churning around the mean, I would say. And it looks like prices have to go higher. I don't see anything around it because the other things that are up from last week are the distillates and crude oil and natural gas, which are not good news. That's not good news if you're a farmer or a producer. It's not good for anybody, but it's certainly not good if you're a farmer or producer when the distillates are flying higher along with crude and natural gas. So that can only add to the cost of production, which can only add to the cost of the customer at the store, which means wholesale prices or board prices have to go higher.
I keep saying that, the Fed killers are nat gas and crude oil, because as long as we keep seeing those prices advance, I mean, it basically, in a roundabout way, cancels out these rate hikes. Don't you think?
Well, yeah, it's a shame we don't have a solution to the problem because, if we had a solution, we could fix it.
We do have a solution.
I know, I'm kidding. Yeah. I mean, it's sad.
Drill, baby, drill.
We have to destroy a class of people in small business while we're waiting, because certainly the most penalized group here are the independent farmers, independent small businesses that cannot compete because of these high costs that are not coming in. So right. Again, markets look like they're going a lot higher. That's the bottom line.
All right, let's give them a reason to buy it. All right, to stay right there, we're going to go away. We're going to pay some bills, and we're going to come back and talk with Todd Horowitz from Bubba Trading after these messages. Welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for sticking around, right? It's been an eventful day. We've had some decent prices here. Let's see what is going on the livestock side of things. They're probably not going to be as beefy, no pun intended, as the commodities were at the top half. Let's see what's going on in live cattle. Let's take a look at that This is quiet. We've got the front months down 20 cents. That's June to 132.20. August is off 45 cents, 132.15. But as you go out the deferreds, Feb has got a 17 cent gain there to 149 even. So let's not make too much of this. There's just not a lot going on. The fronts are a little easier. The backs are a little bit better. And that's what we should say about that. Feeders. Let's see if we can read anything in this one. Not really. Look, corn's higher. This is going to put a little pressure here. But I would probably say, given how much corn is higher, that this is not too bad of a feeder board, believe it or not. Let's talk about August. It's down 57 points or 57 cents to 166.10. And you go out the deferreds. The worst is 70 cents lower in October to 171.85. So that's not too bad, I guess, considering corn. And then lean hogs. This was been an interesting one. That's given up a little bit in the front. June's off 72 cents to 110.37. But as you go out the backs, even say October and December, they both gain about 40 cents to 94.70 in October and 86.90 in December. Todd, we've got about 45 seconds. What would you take away from all those livestock prices?
I think we're all, just like grains, are kind of hovering where they closed last Friday. I think that cattle will continue to struggle as long as crude oil continues to go straight up, which will be more of a boom for hogs. But at some point, hogs will find a price that is too high as well. I think the overall economy is in trouble. I think we've got a lot of issues here, and certainly it's going to come down to inflation, which is higher than anybody admits to. And what the Fed's going to do is going to make it even worse, but they have to because they should have been doing it for 10 years.
Well, that's a pretty good sum of everything. I agree with you. The Fed, and you know what? We're going to run this the risk of overshooting now. That's my next worry. But anyway, that's for another show. Thank you very much. Have a great weekend. Todd Horowitz, Bubba Trading in Las Vegas. We'll bring it back to Nashville so I can throw this over to Suzanne.